Good morning traders, and welcome to a special edition of today's The Daily Call, Tuesday the 14th of April. Before we get started, as always, please understand that any advice in today's session is of a general nature only and that your personal circumstances have not been taken into consideration. Good morning traders. Hope you are all keeping well in isolation. We are experiencing extreme unique circumstances globally. Coronavirus, of course, is the headline of every news, and it has impacted significantly not only on our personal lives and employment, but it has affected the markets as well. Stock markets have plummeted significantly. Some are recovering. We are still a long way those highs that we experienced 6 weeks ago. Our own Aussie dollar is also coming under pressure. Of course, China is a major supplier, a major economic partner for Australia, and our own Aussie dollar has significantly lost its value as due to the coronavirus situation at the moment. It is recovering in particular instances now. We're a mini recovery. Our Aussie dollar is back around about the 63 cent mark, but is still far from where it all started. Now, what I'd like to do in today's session is I just want to take you through a few charts. I don't have a specific chart of the day as I usually have, and that's because when there's so much fear and the markets are reacting out of headlines, fear, and those types of situations, the technical analysis don't seem to work very well, so I have refrained from providing you a chart of the day. But what I will do is I'll look at the majors, I'll look at gold, the commodities, the index, and let's see if we can find some clarity into what may occur over the coming weeks. Of course, we have the unemployment numbers that are due out later this week. Most analysts are predicting it's going to be somewhere around about the 10% mark. We don't know exactly. We do have sales numbers coming out from the US this week as well, and a couple of indicators which will give us the first litmus test to how much damage has been done to the economy with this isolation. Of course, we know that isolation is the only way that we can, or the only proven weapon that we have against this virus until a vaccine is available for us. So let me start off with our charts. Let's see what we can see and see if we can have some further clarity into what the markets will give us in the coming weeks. Let's kick off our analysis and we're looking at the Australian US dollar pair. Now you can see prior to the coronavirus information coming out and the crisis and the panic in the market, which really started around about that point there, and we had this huge drop. We were sitting at around about 67. We dropped and we actually touched the low of 54. Let me just check exactly for you. It's 54. Actually, the low was 55.08, so we've almost touched the 54 level there, and we can see that the market is recovering at the moment. It is pulling back. It has been solid. Now, what's it going to show us in the future? Prior to this fall, shall we say, we could see that we had some kind of a floor in this region there. Typically, if let's ignore this big drop for a moment. If we were just looking at our technical analysis and we looked at that as some kind of a floor, typically when we break through, it broke through down, went back, and we can see that it tested the previous floor and then it shot down. Now, naturally, if the market continues to recover, I would expect there to be some kind of a resistance around about that level again. So in the coming weeks, we could see our Aussie dollar trading somewhere in that region there. Now, of course, the chart is not clear enough to sort of see a specific trade. In fact, I think it was a week ago, I saw this trade over here, and I thought surely it's going to continue to go down. I looked at it for myself. It did try to go down, but then it's recovered somewhat. So the technical analysis is at this particular moment, it's still, we need the market to settle down. We need more flow. We need more continuity to get a better understanding. Okay, let's move on. Let's have a look at our Euro USD. Well, of course, I'm looking at daily charts. Now, the Euro USD is behaving slightly more normal, although the limits are quite large. If you have a look at the high, from that high over there, that's nearly 115, and it went down all the way to, well, it went down 850 pips to 106.50. So that's a big movement there in a very short period of space. Time, should I say. But what I'm specifically looking at in this chart is that the market seems to be compressing, and we could get a little bit of this before it actually pulls in either direction. So this is more typical chart analysis, more typical behavior of the markets. Although these extremes are quite dramatic, the motion itself seems to be more normal, something that I've seen before from my experience in looking at these markets. Okay, so that's what I see in the Euro USD at the moment. It is compressing, so the trading band is narrowing. Let's look at the US yen. US yen seems to have recovered more into a normality quicker. You can see that the initial big spike again is through there, okay, and as quickly as it went down, it did recover. And let's just measure it out. That movement was, that's just over 1,000 pips. So these are extreme large movements. For those of you who are newer to trading the markets, you wouldn't have seen movements this big this quickly. Okay, so what I can see from this particular chart is that if we ignore, let's just ignore this whole middle section here, ignore it, essentially it's a market that is kind of doing this, and it's still trading within a range. So the next logical level is going to be here. Let's see if the market can actually hold and push back towards that level and continue trading within that range. Okay, so again, I'm only just looking at any kind of technicals that I can see. As I said before, I'm not producing a chart of the day. There is nothing clear enough, and the market's still a little bit too volatile. But I'm just trying to give direction and just foresee what may take place in the coming weeks. Let's move on. Let's have a look at oil. Okay, oil, we all have been affected by oil in the simple terms of putting petrol in our car. We've seen oil drop down to almost, in my area, I've seen it as low as about $1.10 a litre in Sydney. Now you can see the first thing that I want to point out in this particular chart is that there was that big gap. Okay, now there is a specific type of trader that is what we term that trader a gap trader, and the theory behind the gap is that that gap will get filled again. So there would have been, when the market opened down here, a lot of people that bought, pushing towards filling that gap to at least that level there. That's where the other side of the gap is, but it didn't happen. Okay, instead the market went this far and then continued to push down. So what that's created is there should be a lot of money in the market who are still long and in very negative positions if they've not already blown out, and they're still as these traders do blow out and they get stopped out, that's what has caused more trickle action to push further and further down. So it becomes interesting now. That gap is quite far away, but you can see that the market continues to try. You can see that's a very sharp attention to the market, and it's been trying very hard to push back up, but again it has failed and it's pushed back down. So for this one's going to be interesting. Will this level hold? That's the first question. If this level holds, then can we see a recovery? And I believe that if we do get a recovery to that level there where the gap fills, the market may range in that area moving forward, okay, at least for a little while. But there is a push to get it to this level. The question is, can the people who are currently holding long positions, can they sustain the losses beyond this level here? They may have put the line in the sand and said, if we get beyond that, I'm stopping out and I'm just going to let this one go. So that's what's going to cause the next major motion in WTI oil. Okay, so keep an eye on that one. Let me move and have a look at gold. Gold is an interesting one. In moments of panic, we know that money is essentially a number on a piece of paper, so it's not considered a safe haven compared to your precious metals like gold. There's only a finite amount of gold that exists out in society. So once that amount is gone, essentially that's why it holds its value. And we can see that when the market dive down very, very quickly, it has recovered just as quickly, and in fact it's actually pushed forward. So what that means is that a lot of people who were holding currencies and they were getting worried, that basically a lot of cash has moved towards gold, and that's caused this movement there. So let's see what happens. But gold has been a great the quickest, or one of the best to recover, and has definitely been an opportunity for astute buyers to be buying anywhere in this region down here. Okay, finally, before we close out our analysis of the majors this morning, let me have a look at our own Aussie 200, our index, and have a reflection on what stocks have done. Typically, if you trade stocks can fall quicker than currencies. Remember, with currencies, it is simply a comparison between one economy versus another economy. So if you're looking at, say, the Australian dollar versus the US dollar, it's just, if it moves in one direction, say downwards, it's basically saying how weak is the Australian dollar getting in comparison to the US dollar. Now, currencies can rise just as quickly as they fall. Stocks in general do not rise as quickly as they fall. So fear creates the fall to be usually a lot harder, as people just want to panic and get out. But when it starts to grow and grow and grow, in general, people don't buy as quickly as they sell off in a panic motion. And you can see that it did happen quite harsh. We had highs of just over 7,000, and we touched nearly 4,300 to the low over here. So the market did dive down. It is pushing up, and now we can see that it's consolidating a little bit. And let's see if it can continue to drift up and how far it can continue to drift up. And a lot of this is going to be determined by the economic situation globally and all the businesses that have had to shut down, and what that impact is globally for everybody. So let's keep an eye out on that one. There may be some good long-term buying opportunities out there in the market. Just do your research and let's see how it plays out. So there you have it, guys. That's a quick overview of the majors in this morning's markets, Tuesday the 14th of April. Traders, just to wrap up today's session, just remember that the markets are extremely volatile. You would have experienced extreme large spreads on trading instruments where you've not seen them before. This is simply because there are not enough buyers and sellers on each side of the transaction. The spread widens, the liquidity becomes low. Also look out for leverage restrictions, as some currencies or trading instruments or metals become harder and harder to fill orders, and there's less demand for them. The spread widens, and of course they come under pressure of economic news, where some brokers are needing to reduce the leverage. Now you can find those leverage informations on our website. Just go onto the specifications of the instrument that you are trading, and you will find there. Also, make sure that you do log into your trading platform. Any notices are sent via the platform and you will receive them instantly. Hope you'll have a great day, and I will look forward to talking to you next week. Bye for now. As always, please feel free to contact us if you do have any questions. Follow me on Twitter at ChatFX for trade setups and breaking news. Most importantly, hope you'll have a fantastic trading day. I'll talk to you tomorrow for the daily call. Bye for now.